Good morning and welcome back to Almus Market Mornings. The technical talks between US and Iran are ongoing in Switzerland as part of the 60 days both parties have agreed to resolve some of the staunchest points of disagreements. Israel's presence in Lebanon and President Trump's renewed threats did prove to be tricky to manage, upsetting the Iranian side. But overall, it seems the negotiations are progressing, and more importantly, Strait of Hormuz remains open for commercial traffic. Other than that, politics in the UK seems to have taken a turn against PM Starmer. He is expected to resign soon, paving way for the seventh Prime Minister in the last 10 years. Good morning, JK. What are you watching for the new week ahead? Are we expecting the dollar index to continue to strengthen?
Good morning. So we should be watching out for more strength in the dollar, no doubt about it. And we'll also keep an eye on the headlines from Middle East. Still, it's not as though everything is settled and we have a sustainable peace progress. Because over the weekend there've been no dearth of influential headlines. Good thing was that it all happened in the weekend and there was no volatility in the market. On Friday, Iran said that US had failed to meet its commitment to halt fighting in Lebanon, and therefore they said they would be closing the maritime traffic in the Strait of Hormuz. Trump had threatened to restart the war with Iran as they, close the Strait of Hormuz. But then later on today, Iranian foreign minister has said that the negotiating delegation's work has concluded, and the technical team will continue their work. And even Iranian foreign minister said oil and petroleum exports are waived for Iran, blockade lifted, some frozen assets released, and more reconstruction and development plan are launched in Iran. So again, complete circle. But oil has come off a bit, but not to the lows that was seen last week. I think market keeps a uh, kind of cautious eye on what's happening in the Middle East because I don't think there is a final word on Israel and Lebanon's attacks, each other's attacks. So that's something that we keep haunting the market. At the same time, oil prices at even near 80 is a big drop from what we have seen over the last few months, and so that's a big relief for the market. So long as it doesn't cross above 85, I think it's still a good point for the risk assets to continue. For the dollar, as you said, I think why I'm seeing the dollar to gain more is, one is, of course, it has broken the key resistance zone in the 100.5 to 100.70 area. And since it has consolidated for a long time in a narrow range, guys are looking for some sort of a directional trade, and they're looking at reasons that are more supportive of the dollar. And one most influential factor for dollar's strength is the short-term yields. That is a 2-year yield, which has widened much more against most currencies, major currencies. And what I have seen over the years is that the 2-year yield is a very good guide for where the dollar is going. But as the yield difference in 2-year widens, more money pours into the dollar because it is a safe asset. And now, in the current circumstance, when there is a mixed view on whether the current rally in the stocks would continue, particularly in the AI, I think people who want to put money in, the safe asset, 2-year US treasuries offer the best scope. So that's where the dollar is gaining. And that is also keeping the yen, which already has broken that 160 mark very convincingly, and now trades above 160, 150 without any interruption. When I mean interruption, there's no intervention from Bank of Japan. There is not even very strong statement that they are giving, possibly because dollar yen is going up along with overall dollar strength. So I'm seeing this dollar strength continue for some more time. It had broken even 101 on Friday, but then retraced a bit. But I think it's right now on balance, it looks like it can gain some more, maybe another 2%. There are some key support areas, 162 in the yen, because that is the level where in 2024, Japanese authorities had intervened in a big time, and also the 1.14 levels in the euro. So these levels might be giving some resistance for the dollar to make further headway. But otherwise, I think overall setup looks like dollar is set to gain some more. As for the rupee is concerned, we are interestingly looking at the RBI minutes that was released on Friday, and it clearly shows that the committee preferred to adopt a wait and watch approach and remain watchful and wary about the generalization of inflation in the coming months, not just the headline. And even the core inflation is what they are looking at. So what they stated was that demand pull inflation may call for preemptive action to effectively anchor inflation, but the cost push inflation induced by supply shocks warrants greater caution and gradualism. So since it's, we all know that this inflation is caused mainly by supply shocks, and therefore the RBI was fully justified in adopting a wait and watch approach, and to see whether these higher inflation sustains or not. Last week was a good week for the rupee. It gained as much as 0.83%. And one of the major factors, as I could see, is the FI flows, which was a net plus for the entire week. Investors put money both in stocks and the bonds during the week, and that's happening after several weeks. And it's definitely a big boost for the sentiment. Hefty buying in bonds where yields hit near 3-month lows, and stocks were also at 7-week high, all clearly showing some FI interest, no doubt. So rupee remains at a stronger level. I think we are in there is some stickiness around the 94.20 levels because of buying from oil companies and other importers, and at the same time higher levels are also getting slightly lowered from 94.80 to 94.70, and now even 94.50, 55 is offering very good resistance. So we need some either a positive trigger to break on the downside, or bigger flows, or some sort of a negative news from the global markets, or a dollar breaking higher into 101 plus areas also might trigger some short covering or some more buying in the dollar rupee. All in all, there is some bias for rupee to be stronger. But one thing I'm keeping an eye on is the monsoon prospects of delayed kharif crop sowing, and adverse impact on crop yield are definitely looming large, as the southwest monsoon has lost the momentum after its inset earlier in this month. Progress of the monsoon has been sluggish, and the cumulative rainfall for the month of June has shown a huge deficit. So, yes, it's not at in a crisis zone. They still expect the fourth week of this month for the revival of monsoon in full force. However, if that disappoints and we go into July with more deficit, then I think it raises concerns about food inflation, consumption, rural consumption, and more challenges for RBI, and perhaps eventually even for the rupee. So as of now, things are looking good for the rupee, and we watch out for dollar index movements going forward. Thank you.
Thank you, Jackie. And yes, I think even for the Monetary Policy Committee, it's not just data and numbers on a spreadsheet to look at. They also look at the skies to see if there is any relief on the monsoon side, because those kind of delayed monsoon, it can have an adverse impact on agriculture. Not yet, we are not yet in a crisis zone, but it's something to keep a close eye out for. Because this year, especially because of El Nino, we are seeing a lesser amount of rains across different regions. Otherwise, rupee remains in a stronger level, 94 on the downside, 94 half on the higher side. That seems to be the broader range for the USD INR. Globally, dollar, it seems it can gain more. It has broken above key resistance levels. It has consolidated for a long time now. We are seeing the short-term yields, that is the 2-year yield, it has risen, and the gap between other countries has increased. So that should keep support the dollar even more. Yen has continuously been weaker. It trades above 161.5 with no intervention by the BOJ. So all of this can result in the theme of the dollar strength continuing. And of course, everyone will be watching the headlines from the Middle East, which have been quite volatile over the weekend. That's it from Sri. Thanks for listening. We will catch up tomorrow with a fresh round of updates.